Hello and welcome to the Monday, December 30th, 2019 edition of Tesla Daily, unofficial Tesla podcast. My name is Rob Maurer. Today we have a lot to go through. We have a leaked email from Elon. We have the Model 3 delivery event in China. We have a report on Panasonic's battery production at Gigafactory 1, updated analyst note, etc., etc. We've got a lot to get to, so let's jump into it. Tesla stock on the day today did finish down 3.6% to $414.70. This compared to the Nasdaq down 0.7%. While the macro environment was tough on the day, that drop, the magnitude of it, was a bit surprising to me, given the news that we got yesterday at the initial delivery event for Made in China Model 3s. We discussed the upcoming event last week, and it looks like that did come to fruition. Tesla yesterday delivered the 15 first Model 3s to employees from Gigafactory Shanghai. Already an incredible milestone as we discussed last week, but the more exciting news came with Tesla apparently talking about their production rate at Gigafactory Shanghai at this point. Reuters is reporting that China General Manager Wang Hao commented on production, with Reuters saying, quote, Wang also told reporters the plant had achieved a production target of 1,000 units a week, or around 280 cars a day, and that sales for the China-made sedan had so far been, quote-unquote, very good, end quote. Now, as I often talk about with these production rate numbers, we need to look at these numbers very closely because at times in the past, Tesla has used extrapolated production rate numbers. And throughout both the Model X ramp and the Model 3 ramp in the United States, those extrapolated production rates led to poor forecasts for investors, as of course hitting a certain production rate for an hour is different than hitting it for a day, is different than hitting it for a week, and is different than hitting it for a month. Production ramps inherently involve downtime, and it's always difficult to get a sense for that from the outside. So when we're trying to extrapolate and forecast, we need to make sure that we understand exactly what Tesla's referring to when they're talking about these production rates. Unfortunately, I haven't been able to find any exact quotes for these comments, but we do have some other reports from other media outlets, so the best we can do is kind of put all of those together to try to understand what's happening. So let's first take another look at the Reuters report. Again, they had said, quote, the plant had achieved a production target of 1,000 units a week, or around 280 cars a day, end quote. So I think this is a good thing because they said had achieved a production target of 1,000 units a week. That strongly implies that that was over the course of an entire week. And the second piece, the 280 cars a day, that doesn't necessarily match up with the 1,000, making it more likely that these actually refer to two different periods of time, and we're actually getting two production rate numbers here. So 280 cars a day over 5 days would be 1,400 in 1 week, and apparently 5 days is what they're working right now from what I've read. So from this single report, my interpretation would be that Tesla has achieved at least 1 week with more than 1,000 units produced in that week, and they've had at least 1 day where they've produced 280 or more units during the course of that single day. Okay, so the next report that we have on this is from Bloomberg, which says, quote, the China plant is already assembling more than 1,000 cars a week and aims to double that rate over the next year, according to Song Gang, the manufacturing director at the facility, end quote. Interestingly, this was changed from last night. Some of you that follow me on Twitter may have seen this. Last night, the article said, quote, the plant is now producing more than 1,000 cars a week and aims to double the rate over the next year, said Song Gang, the factory's manufacturing director, end quote. So interestingly, they changed producing to assembling overnight for some reason. But either way, this is a report from a separate media outlet, Bloomberg versus Reuters, and they're also quoting a separate source, Song Gang versus Wang Hao. Both are saying more than 1,000 units per week. The third report that I've seen on this comes from Kelvin Yang at KelvinYang7 on Twitter. He's been a helpful resource reporting on China in the past, and he reported a few pieces of news from this, saying that executives at the delivery ceremony said 28 cars per hour with 10 hours in a single shift. So no mention from Kelvin on the 1,000 unit production week, and this is also slightly different than saying 280 in a single day because this is 28 per hour over a 10-hour shift. So again, extrapolating that hourly rate to a daily rate. That may imply a little bit of caution around that 280 per day number, but to counterbalance that, he also says, quote, second shift early next year, pending on recruiting, end quote. If uptime wasn't high or projected to be high soon, they wouldn't necessarily need to start a second shift because they could just get more uptime from that first shift. Overall, trying to piece all of this stuff together, it seems likely to me that Tesla has achieved a week of 1,000 units. That would be lower than that 280 per day or the 28 per hour, even with just a 5-day shift. And then I think the peak rate is around that 280 per day. Kelvin on Twitter also adds that, quote, 28 per hour is at design capacity, end quote. If that's an accurate assessment, I think that's obviously very good news for Tesla to be able to produce more than 1,000 made in China Model 3s already at this point. And if it's accurate that they will be adding a second shift early in the year, and that potentially indicates high uptime within these production hours, even better. So back to the main point, with all of this news, I was surprised a bit to see the stock down the magnitude that it was today. But I think this is widely being missed, at least the impact of it, by the financial media today. I think the drop was more symptomatic of the large run-up that we've seen combined with the poor macro performance today, and maybe some small impact from an updated analyst note from Cowen, which we'll talk about here in a second. First, a couple more things on this Made in China Model 3 delivery event. It sounds like as far as delivering the remaining vehicles goes, there will be some employee deliveries over the next couple of days within Q4, but that deliveries should really start in volume in January. The other thing that was kind of cool just from the event, in case you didn't see it, is the last Model 3 that they delivered, so the 15th one of the evening, involved a marriage proposal from one of the employees picking up his car. It ended up with a pretty fun video. The guy had an outfit change stored in the back of the Model 3 as it came out. He had a whole bunch of flowers set out in the front, and of course his now fiancée did say yes. So it was just kind of interesting, especially thinking about it in the context of my conversation with Alex Potter as we talked about sort of the appeal of the BBA brands, so Benz, BMW, and Audi, and the roles that those brands play as status symbols when trying to attract a mate in China. I think seeing things like this gives us a glimpse into Tesla's ability to also fulfill that role. Obviously a small piece of evidence, but interesting nonetheless. All right, so let's move on to this Cowen note that may have had an impact on the stock today. Cowen did raise their price target, but still put their price target at $210, up from $190. From MarketWatch, quote, shares of Tesla Inc. sank 4.2% in active morning trading Monday, after Cowen analyst Jeffrey Osborne said he expects the electric vehicle maker's full-year delivery total to be below the low end of guidance amid disappointing Model S/X results. Although Osborne raised his fourth quarter delivery estimate to 101,000 from 95,000 to reflect strength in the Netherlands and China ahead of subsidy reductions, he said he believes the 2019 delivery total will be about 356,000 vehicles, slightly missing the guidance range of 360,000 to 400,000 vehicles. For the fourth quarter, Osborne expects 15,000 Model S and X deliveries, below guidance of 20,000, while his estimate of 85,300 Model 3 is in line with expectations of 85,500, end quote. Tesla needs roughly 104,600 deliveries in Q4 to meet the low end of guidance at that 360,000 for the year. So Cowen has them missing that, despite the fact that in the Q3 update letter, Tesla said, quote, deliveries should increase sequentially and annually, with some expected fluctuations from seasonality. We are highly confident in exceeding 360,000 deliveries this year, end quote. So Cowen, I guess, not buying into that. All right, whatever. Fine. We're going to come back to that topic as well. But the other part that stuck out to me here was on S and X, where he says guidance was 20,000 units. And I have no idea where that would have come from. Tesla barely even gave overall guidance, let alone guidance for S and X combined. Last quarter, they delivered 17,500 S and X and produced about 16,300. And on the call, Zach addressed that a couple of times, saying both, quote, in the immediate term, we're focused on increasing production of Model 3 and Model S and Model X as quickly as we can, end quote. Later adding, quote, and we are increasing production on our S and X lines for this quarter in response to increasing demand. And so I think part of the story here is, as we have launched, ramped, and stabilized Model 3, that's kind of consumed a lot of the attention around the company. But now as that has stabilized, we're able to focus our attention and balance that between S, X, and Model 3. So the delivery numbers in Q3 understated the interest in the product for that quarter, and we continue to see strength in the order rate, which we anticipate will be reflected in the S and X deliveries in Q4, end quote. So the most optimistic point of view of that communication would be that Tesla's targeting more than 17,500 deliveries in Q4, as that was the base from Q3. But Zach is actually talking about production in those numbers and then translates those into deliveries. So really the base that he's probably referring to is the roughly 16,500 production number for S and X in Q3. Either way, unless I'm forgetting something, I don't recall ever seeing 20,000 units being the guidance for S and X for Q4. The only other time this is referenced is in the installed annual capacity chart that they included in the Q3 update letter, which lists the current annual installed capacity for S and X in Fremont as 90,000 units. Even that number, though, if you take that down to quarterly, that ends up as 22,500, so no match to the 20,000 here. So pretty peculiar. I do think S and X are probably going to surprise to the positive end, because I think a lot of people are discounting those comments that Zach made on the call. But if this goes around and starts getting the expectations set at 20,000 and people assume that that was the guidance, then maybe that removes some of that surprise, which would be unfortunate. I want to stay on deliveries here for a few more minutes. I have a few more thoughts on it, and then I also have the FactSet consensus estimates as of today to share for Q4. The FactSet numbers are important because the media often uses them as a benchmark for success when Tesla publishes its delivery and production reports. So the current overall FactSet consensus sits at 106,163 total deliveries for Q4. And then by model, that breaks down a little bit differently because not all analysts project for the individual models. So the sums of these numbers will vary from the actual overall FactSet consensus. That being said, the FactSet consensus for Model 3 is 87,936, for Model S, 9,757, and for Model X, 9,298. That would put S and X in combination right around 19,050. So basically right now the expectations are for a small beat to the low end of guidance, which I think makes sense given what Tesla communicated. However, again, Tesla did say, quote, "We are highly confident in exceeding 360,000 deliveries this year," end quote. This consensus estimate puts them about 1,500 units above that, which if deliveries do end up around that 106,000 level for the quarter, then 1,500 units is only slightly more than an average day's deliveries. That's a pretty small margin for Tesla to communicate so confidently that they would beat that lower end of guidance. Over the last 6 months, Tesla has done a lot to restore my confidence in their guidance. So looking at that statement, my expectations are higher. Let's pair that then with a report from Electrek today, which is saying that, quote, "Several US Tesla buyers told Electrek that Tesla informed them this weekend that they will not be able to deliver their cars by the end of 2019. The only choice they were given is to take delivery early next year without access to the $1,875 federal tax credit, or cancel their order," end quote. This is a stark contrast to previous end of quarter behavior that we've seen from Tesla. Last year, Tesla actually said they would cover the difference if they weren't able to sneak some people's deliveries into Q4, meaning they would only end up getting half of the $7,500 tax credit at that time. So night and day difference there. And then in most previous quarters, we tend to see some discounting happening at the end of the quarter to try to optimize Tesla's reduction of inventory to buyers that are close by that inventory. This quarter, we haven't really heard any reports of that happening on a widespread basis. If it is happening, it seems to be very isolated. And furthermore, you pair both of those things with the fact that Tesla has raised prices, 3 times this quarter, and they've also got a bunch of inventory that they just produced in Gigafactory Shanghai that they're waiting until January to deliver. Now, maybe there are other circumstances for that Shanghai inventory for some reason that we just can't really put our finger on yet, but even if you set that aside, you're still looking at a compelling set of evidence here to show strength for Tesla heading in to the end of the quarter. Would these things be happening if Tesla wasn't comfortably ahead of that 360,000 level? I don't think so. Another point that we're just getting to is that in past quarters, we've seen leaked emails from Elon pushing for certain delivery number targets, and we didn't get that this quarter. We do have one to talk about here, though, with Electrek also reporting on this on Saturday, saying, quote, "In an email obtained by Electrek, CEO Elon Musk tells Tesla employees to, quote, ignore stock price, end quote, as it soars to new highs in a market rally, end quote." Unfortunately, they did not share the whole email, but they did share 3 snippets. First one says, quote, "My silly jokes on Twitter are just that. What really matters is our actual execution and effectiveness as a company," end quote. The second says, quote, "Ultimately, I think Tesla will be worth considerably more than it is today, but there is a constant debate as to whether that means the value should be higher now or later," end quote. And the third says, quote, "This is the unfortunate consequence of being a publicly traded company. So it goes. Heads down execution is the right thing to focus on now," end quote. So a big emphasis here on execution, which makes sense, but a notable lack of any specific targets like we've seen in the past. And yeah, maybe Elon was just tired of those leaking, but at the same time, that's also a very effective way of level setting expectations if they need to be level set. So a lot of things here that I think are suggestive of a beat, but a couple of important caveats. The FactSet consensus doesn't necessarily capture Wall Street's expectations or the market's expectations as a whole. It's just a compilation of different analyst estimates. True expectations may very well be higher. FactSet, I think, is important in the perception of the report based on the media's reaction. So I think it's important, but it may not necessarily be the best representation of Wall Street's actual expectations. And then the second thing is that I think it's pretty clear both through the FactSet consensus as well as just the stock price and the appreciation that we've seen recently that people do expect Tesla to beat the low end of guidance. Generally, going into things like this, high expectations is really not what you're looking to go into. That represents a lot of downside risk. Before we know the numbers, they could be anything. There's a lot of potential there. Once we actually know the numbers, that potential fades and we have the actual. That can be a really great thing if the actual is strong, but if it's just neutral or negative, that imagination ceases and that excitement dwindles, and the stock can fall even on a pretty good report. The point here being that it's important to recognize that there is significant downside risk to this report later this week, and of course, plenty of upside as well. I definitely think the stock can continue to go higher, but anything sort of below that 104,500 target that they need to hit, I think could be pretty painful in terms of the short-term reaction. Again, I do think it will be a beat, but if you are doing any sort of trading around this report, it's important to think through all of those things thoroughly. All right, moving on from deliveries then, we have a report from the Financial Times about some comments made by Panasonic as it relates to battery production from Gigafactory 1. After an interview with Panasonic, the Financial Times is reporting that Alan Swan, who is the president of energy for North America for Panasonic, had some positive comments around Panasonic's ability to ramp up battery production at Gigafactory 1, all the way up to 54 gigawatt hours. So in the quote I'm going to read here, 54 gigawatt hours has been added for context. He says, quote, "For us to move to 54 gigawatt hours should not be so hard. We now have the know-how to do it in quite a high volume environment." End quote. That's really good news if there is a clear path to 54 gigawatt hours. At 65 kilowatt hours per vehicle, that would be about 830,000 vehicles, or about 750,000 vehicles if you take 5 gigawatt hours out for energy storage projects. That would mean a clear path, at least from a battery perspective, for Tesla to double production, both on vehicles and storage, and that's before accounting for production from Gigafactory Shanghai. You can start to see a clear path to 1 million vehicles then, and that's again before accounting for Gigafactory 4 in Berlin. So super clear path here for Tesla for the next couple of years. Beyond that, we got a really interesting tweet from Elon Musk today in reply to Clean Technica. They posted an article that was a flashback to May of 2013, where Elon Musk said that the fourth Tesla should have a base price of about $40,000. And here we sit today with the Model 3. So this was something that Matt and I talked about in our long conversation a week or two ago. Is that clear visibility for the next couple of years, and then really not that much insight into what lies beyond, other than whatever autonomy ends up becoming. But anyway, Elon replied to Clean Technica on this and said, quote, "Seems like so long ago," end quote, to which Clean Technica replied, quote, "Like another lifetime. What's your top prediction for Tesla in 2023 or 2024? 4 years out, like that one was," end quote, to which Elon replied, quote, "We'll talk about that on Q4 call," end quote. So as if we needed further reason to be more excited for the Q4 call, it looks like we may get some more insight into some longer term things, which are always the most exciting in my opinion. I figured they'd save a lot of that longer term stuff for Battery and Powertrain Investor Day, but maybe it falls outside the scope of that conversation, or maybe they just want to give us a little bit of a teaser for that event. The last quick thing for today is that Car and Driver has been conducting a long-term review of the Model 3, and unfortunately over Christmas experienced some sort of failure that made it undrivable. The notification on their app said, quote, "Your car suffered a failure and will no longer drive. Contact Tesla Roadside for assistance," end quote. So unclear exactly what caused this. Obviously, they're not super thrilled with it. They published an article on it today saying this was a first for any of their long-term test cars. So we'll keep an eye on that story. I'm sure it will further develop, but if you want to read that article, just wanted to point that out. Last quick thing for today is the podcast currently sits right below 500 reviews on Apple Podcasts. So if you guys wouldn't mind, I'd love to hit that by the new year. If you haven't left a review yet, I'd appreciate it. And that'll wrap it up for today. So thank you for listening. You can also follow me on Twitter at Tesla Podcast. If you want to support the podcast, you can learn more about doing that at patreon.com/Tesla Daily Podcast. And if you have questions or feedback, you can send those to me at tesladailypodcast@gmail.com. Don't forget to subscribe, and I'll see you tomorrow for the last episode of 2019. Thank you.